You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
The trading day doesn't start when the opening bell rings. Pros understand that risk never sleeps, and market-moving events happen around the clock. How can you arm yourself with the information you need to understand what's going on across the pond and how it can impact your portfolio? Welcome to the European Market Brief, your go-to source for information on the fast-moving European derivatives markets. Each episode brings you expert insights into the latest market trends, discussions of cutting-edge trading strategies, breakdowns of exciting new products, and analysis of thought-provoking trading activity. The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of EURO STOXX, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com. So join us as we shine a spotlight across the pond and explore the cross-border volatility, regulation, and innovation that makes the marketplace so fascinating. It's time to get the European Market Brief.
All right, everybody. That music means we are back once again. It is time for, can you believe it, episode 10 of the European Market Brief. Hard to believe already at episode 10. This seems to me like the show we just launched a few months ago out here, but already at episode 10. Time to talk about things across the pond. Once again, my name, of course, Mark Longo from theoptionsinsider.com, as well as from the network that this show, a great example of, continues to grow by leaps and bounds. Not just this show, not just 1 year anniversary. Crazy to say out loud, 1 year anniversary already for the Futures Rundown. Another new addition to me, and if that's not enough, just about a month ago we launched the Hot Options Report. So if you like your daily slice of data, which very much germane to what we're talking about on the show today, then you should be checking out the Hot Options Report. Remember, wherever you're listening to the European Market Brief, make sure you're subscribed to the full Options Insider Radio Network. Over a dozen programs coming at you over there, pretty much 3 a day, most days out there. And of course, if you're ready to dive deep, you want, let's say, maybe some early access to some cutting-edge, unusual activity research like we did last week on the Pro Q&A or giveaways or live streams. All sorts of fun. TheOptionsInsider.com/pro is the place to go to learn more as we learn who's joining us on the old European Market Brief for episode 10. First, out to the Big Apple we go, where he is in transit as we speak, hanging out in a good old school yellow cab, NYC yellow cab. Don't see a lot of those anymore, where we are joined once again by our good buddy, Mr. Russell Rhoads, who, when he's not in NYC, is hanging out over there at the Kelley School of Business. Mr. Rhoads, welcome back to the European Market Brief, sir.
As always, very happy to be here. I'm sitting still in traffic, but as you mentioned, I'm traveling old school. And apologies if there are any audio issues, but I think the Apple iPhone will suffice.
If you're on the cab for the whole show, that's going to be quite the hefty cab bill, sir.
You don't. I'm going to send you a picture after the show.
That meter's running.
Of my $194 Uber from LaGuardia to Manhattan.
I was going to say, are you going from the Bronx to the tip of Long Island? Where are you going?
I know.
All right. Good stuff. And also joining us for the first time on the European Market Brief, but holding court on a lot of other programs, including Volatility Views, and most recently, the Advisor's Option, our good buddy, Mr. Matt Amberson from ORATS, a.k.a. Options Research and Technology Services, a.k.a. the creator of everyone's favorite rogue AI, known as Otto. Mr. Matt, welcome back to the show, sir.
I can't wait till I'm a stone cold professional like Russell and could just, pop these off from anywhere I am traveling. So that's my goal, Mark.
That's all of our goals, to evolve to the level that our good buddy Dr. Vic / VSTOXX has reached in life. All right. And joining us last but not least, holding down the Eurex hot seat this week, we have another another newcomer to the program and indeed to the network. He is Daniel Murillo, the Associate Vice President and U.S. Sales Manager for Market Data and Services over there at Deutsche Börse. Daniel, welcome to the European Market Brief, sir.
Hey, Mark. Thanks for having me. Hey, Matt. Hey, Russell. Looking forward to it. Should I run through like a brief kind of intro or?
Yeah, let's do that now. Tell our listeners a little bit about your background in the world of finance and derivatives, as well as what it is you do day to day over there at Eurex.
Yeah. So, like I mentioned, Dan Murillo is the name. I am the Assistant Vice President at Deutsche Börse, working specifically within the Market Data and Services Department. And what we do, what I do specifically is I manage the analytics business for the Americas. That coverage includes the US, Canada, and South America. In terms of my background, I've spent most of my career in market data, specifically within the institutional sales space. Most of that time spent at Bloomberg, covering the Canadian business for about 12 years. And that, in terms of asset class coverage, spanned everything from equity and fixed income desks on the sell side to covering buy sides up there as well. So a lot of experience with that before moving over to Deutsche Börse.
There you go. We're going to do a whole show on CDRs, 1 hour on Canadian depository receipts. You heard it here first, listeners, as we keep on rolling into a little bit of the old continental conversations.
It's time to catch up with the thought leaders who are shaping the European derivatives markets. It's time to have Continental Conversations.
All right, everybody, welcome to the Continental Conversations, a portion of the show where lately we've been going on a lot of quests across the pond to discover different aspects of the European market. We've gone on the quest for the European equivalent of the S&P 500. Just the last show, we went on a quest to hunt down some dividend yield across the pond. I know a thing that is near and dear to the hearts of many of our listeners. We've talked European vol versus American vol. We've gone on many different quests on previous episodes of the European Market Brief. Today, we're going to go on a very specific quest, a hunt, if you will, for data. I mean, at the end of the day, that's a question we've received from a lot of people listening to this show, is how do I come to grips with these markets? I like what you're talking about. I like what you're talking about dividend yield. I like what you're talking about maybe with the DAX. I like what you're talking about with VSTOXX. All these things resonate to a wide variety of the audience, but then they have challenges coming to grips with these products in terms of finding them on their screens, finding them on their platforms, finding reliable data to be able to trade these things. It's not an insurmountable obstacle. We're going to dive into how you can do that on the show today. So let's start first from everyone's favorite New York City taxicab fellow. Maybe he's doing his own little taxicab confessions, or what was that show?
Taxicab Confessions. You nailed it.
But there was another one where you got cash cab. There you go. You're going to win some prize money.
No, I don't think I'm in the cash. I'm not in the cash cab. So the data is difficult across the board. Even trying to get decent U.S. data. There are a couple of resources that are one's basically free and the other one is pretty cheap. The free one is investing.com. They've got a lot. They have a really good section that covers European markets as well as U.S. markets. My old school go-to used to be Yahoo Finance. They did start charging for a few things, but also the Yahoo Finance, it messes with you with respect to where you are regionally and what it'll let you do market data wise. Like when I'm in Europe, it behaves differently than when it's in the U.S. So for U.S. investors, I don't think Yahoo Finance is very helpful. But the one that I use, and it's so worth, and I have nothing to do with these guys. I'm not getting a kickback or anything, but the barchart.com. They have several of the European futures markets, and they have intraday data. If you're paying $30 a month, that you can download. And in fact, if you've heard me talk about trading VIX versus VSTOXX, which I'm sure may come up a little bit later, but if you've heard me talk about trading VIX versus VSTOXX, and I created this equivalent closing price at 10:30 Chicago time for both for the front month VIX future and VSTOXX, that is 100% from the data that I was getting from Barchart. So you're able to do some pretty good analysis on the European futures markets, the main ones that trade using Barchart.
Yeah, this is not the first time you mentioned them. Just in the last week, you mentioned last week when you're talking about your unusual activity data, you've been crunching a lot more of their data. And you're right, I can attest to the European futures side. They do have a pretty good offering there. We have explored it on this show. We've explored it on our Futures Rundown show as well. I know the old days, the barrier for retail used to be free versus not free. Retail only wanted free tools. These days, that has evolved. We see a lot of our audience, and Matt can attest to this, a lot of our audience willing to pay for quality data, quality analytics, within reason, because they see it's very much additive to their trading as well. So even if there's a modest fee associated, I think a lot of our listeners will definitely be willing to shell out if it adds to them. I mean, especially for this particular segment of the market where data is such an important thing to have before you're going to come to grips with it. So I don't think the paywall is quite the barrier that it once was, Russell. Would you agree?
No, I don't think the paywall, and it's funny that you just brought that up. Because it's not just at the retail end of things. We mentioned I'm in a cab, I'm at a conference, and the beginning of the conference they were talking about what's changed year over year. And one of the things that's changed year over year is firms. Alternative data has gone from a nice to have to a kind of essential, that you really do have to pay up for data beyond what's being provided for free. And part of that was market data and reliability, but then also and usability, because you usually only have like daily closes, and that doesn't work for a lot of people. But also just reliability with respect to some of the government numbers that we're getting now. Maybe economic wise, you need to be looking at some other indicators than we have in the past.
By the way, let me give a tip of my cap to your cabbie, because the acoustics in his cab are fantastic. So there you go. Maybe you need to do all of your shows in a cab from now on.
I will let him know. So
the acoustic padding he put in his cab just for the show. Tell him we appreciate that.
Oh, and hold on, Mark. One last thing. I do apologize, but the Eurex website is awesome as well. And I should have mentioned that up front. But Eurex continues to add things to the website. I've helped them with some of that. But the Eurex website, if you really want to start getting involved in some of these markets, that is an essential stop for you. So apologies for talking over you there.
That is where we send people at the end of every show. At the end of the day, Eurex.com. I have a feeling Daniel will have a few things to add to that in a minute. But before we get there, Mr. Matt, you know a thing or two about the data side of the space. May or may not be why you're joining us today on the show. Maybe we just like the cut of your jib. I don't know. But either way, Mr. Matt, let's start there. You and I have talked many times on this network over the years about domestic markets, domestic vol, domestic earnings. We've talked about that ad nauseum. But let's start there. Give our audience a bit of your use case, your thoughts, and what catches your eye when you're looking at the markets across the pond. Are there any particular, let's say, products or markets or maybe volatility that really resonates to you, sir?
Yes, and it's important to know what's going on. For example, what's catching my eyes right now is volatility is extremely low across the pond. It's low, but it also has some interesting country dynamics. ORATS covers a lot of the ETFs from Spain, France, Italy, Germany, England, and of course the EURO STOXX and those types of things. And volatility is at kind of lows that we haven't seen in a few years. What we're seeing is the contango, which also shows fear in the market, is high, but that's inversely related to fear. So that means that the front months are low. There's a lot of complacency there. The put call slope is steep, but that happens when vol is low. So what we're seeing is not much going on over there from a volatility standpoint, except for when you start to look at some of the countries. So what's interesting is Germany, their implied volatility is quite a bit higher than in the UK, for example. Those are kind of the two ends of the spectrum. Germany is about 15.5. UK is significantly lower at around 12. So those are some interesting things to look at. I also, when you started talking about dividends, I also started looking, ORAT's coverage of dividends. The highest dividends by far are the United Kingdom. Their ETF, that EWU, they have a lot of REITs and utilities in there that drives it very high. And the European ones are relatively low, but they have some more growth stocks like ASML that are large, and SAP that kind of dilute these yields in the European markets. But I think any trader, even if you're only trading domestic, you want to know what's going on across the pond. There are a lot of liquid markets over there. There's also a lot of illiquid markets that we could talk about later. But that's what I'm seeing now, Mark.
Yeah, that's a point we make on this show all the time. Even if you're not trading these markets, you need to be cognizant of what's going on across the pond. I guess we should have had you on the dividend yield show, Matt. That would have been a good use case for your platform as well. But Matt, you and I are always talking about back tests on the network. You're kind of the king of the back tests over there. What is it, 100+ million back tests you guys have run over there? Are there any specific back tests you've noticed cropping up on the ORATS platform recently that tend to look across the pond? Or some of your clients looking and back testing any interesting European products? Or maybe for you, as you've been crunching the data, are there any products that have stood out to you and said, this is an interesting result that perhaps I hadn't considered, sir?
Yeah, and as you know, ORATS is known for our back tests. It's now 390 million pre-run back tests.
Oh, I sold you short. I apologize.
Yeah, I know. And so, yeah, we definitely look at, a lot of back tests. And as everyone knows, over the last, we backed this way back to 2007, but still, except for the global financial crisis and COVID and a few other things, it's been kind of the escalator going up. But some of the European stocks haven't been that way, so they make it much more interesting to test. So, for example, in the United States, the back tests never come out well for, covered calls or something, but European stocks that have gone more sideways, they do have better covered call back tests. So, people are looking to generate income. They don't necessarily have to use domestic. They don't have to go over to Europe, although they could, but they could also use the ETFs that we cover. So I think the big thing, Mark, around backtesting is that we don't have the path dependency or the path that of just a straight bullish run that we have in the United States, and you could get a lot more fair results on backtests for bearish type strategies. Now, I should also say that one of the reasons that it's difficult to backtest some of these markets is that even the liquid markets have some very illiquid expirations. So ORATS has this calculation, this confidence calculation, and it's subjective, but it looks at how wide the markets are, the number of options around the money that have a good bid implied volatility, so we could at least calculate some things. So what ORATS does well for these markets is we provide a smoothing mechanism that is informed as to how wide certain markets are, and we try to use just the tighter markets in a particular expiration, for example. So we can help the backtesting process by creating theoretical values and also introducing confidence factors on those trades. Backtesters could say, hey, only our confidence goes from 0% to 100%. 100% is SPY. I don't know, 75% is the EURO STOXX. 50% might be the EWU, the UK ETF. So you could specify what's your minimum confidence, and then you could get backtest that you could have more confidence in. So these are major things that we do. And then we also, I'm looking at the EURO STOXX right now for the ETF, and I see that, like the markets in the kind of the weeklies that are out there are $1 at $3. So that's a little bit tough to trade. That's right at the money, November 7th expiration. So that's, just a month and a half out. So, it's kind of that's a difficult backtesting option, but, through that we have values that we calculate. So, 214 is the smooth value. And so that helps you say, it's not just 2, it's slightly above that if you kind of use the other strikes around it to get a smoothing mechanism going, so to help your back tests, so we fit that in versus other ones. So those are some of the tricks and tips and cautions around back testing, especially some of these European markets that don't have the liquidity that we have domestically, and some of the results that we see for European related assets versus the domestic ones, Mark.
Those are good tips, both about the smoothing. I think a lot of our audience will like that. They need that help when they're looking at a lot of markets where, shall we say, the bid ask is a little bit wider, but also about the different market conditions you can encounter over there across the pond. You're right. We've been in pretty much not but a straight upward market here in the U.S. for the better part of the last half decade out here, with a few hiccups here or there, but pretty much straight up. So that's very much going to color how the back tests and a lot of your favorite strategies perform. Across the pond, listeners, not quite the case. So a little bit different over there, and may provide, dare I say it, perhaps more information on the back test than just this kind of straight up environment we're looking at here in the U.S. All right, Daniel, I know you're eager, you're champing at the bit to talk CDRs. We'll get there in a little bit, sir. But first, let's start with what Russell mentioned there at the top of the show. We'll start with the low-hanging fruit first. For a lot of our listeners who are listening to this and they're wondering maybe what kind of data can they come to grips with over there on the Eurex website, sir? Let's start there. What kind of data can they find over there, sir?
So sure. Thanks for the question, Mark. Specifically, if you're trading on Eurex, there are a number of analytics and different data subscriptions that you can subscribe to. Specifically, and important to note within my group, all of our analytics and subscriptions are historical data sets, and they're offered T+1 or intraday. So really specific to the backtesting conversation, we see a lot of our data taken or trialed specifically to incorporate into certain strategies and hopefully find a signal by the end of the trial basis. But overall, we work with a number of different exchanges that fall under the Deutsche Börse umbrella. So obviously Eurex, right? But there's also, there's Zitra, our cash equities venue. There's 360T, our historical market data spot and swap venue. Clearstream is our bond and liquidity platform, which provides insight into instrument liquidity and trading activity through a post-trade data set. And then EEX, which also is just your European energy exchange, which kind of rounds out the group. But working with just a number of different exchanges overall allows us to really kind of just deliver unique products back to the market that can't be found anywhere else. So in terms of the actual data sets and specifically focusing on Eurex, there's flows and open interest, which is the most popular, and that is basically your buy minus sell volume broken down by really specific market participant types. So that data set in particular, like I mentioned, is the most popular. But under German law, you're mandated to identify who you are if you're trading on the exchange. So breaking the data down by those market participant types is really important. And those three different categories are your agents, your market makers, and your proprietary traders. Excuse me. Along with the flows, also very popular is open interest, which basically has that same sort of aggregation or breakdown as flows, but it then accounts for all your post-trades adjustments. So you also have on top of that, specifically for Eurex, you have something called HHI. Don't mean to get you guys with the acronyms too much, but that is going to be your Herfindahl-Hirschman index, which helps to assess the quality of available liquidity. And you also know there's one particular data set that, I would remiss if I didn't mention that really kind of stands out and gaining a lot of traction lately with specifically our HFT customers. I know that doesn't pertain too much to retail, but our high precision timestamps offering, which is also available for Eurex, we've got some really great and big developments in the pipeline for that product. So looking forward to seeing what the reaction to that is as well.
You mentioned the HFT just really quickly. You're right, because we have all breadth of listeners on this show. The lion's share, of course, just by volume, always going to fall into that high-end retail category. But we have a lot of professionals, institutions floating around out there as well. I'm curious, from your perspective, Daniel, you've been watching the data scene evolve in Europe for some time. How big, how active, and importantly, and how aggressive, how much growth is there on the European HFT scene? We talk about it here in the U.S. a lot. We don't talk about it across the pond as much, Daniel.
So yeah, there's a lot of growth. So specifically, just focusing on HPT for a second for our HFT clients, right? Not to get them confused.
That is just alphabet soup, sir.
Yeah, right. So HPT, like I mentioned, is our high precision timestamps offering. And what it does is it allows your low latency participants to calculate the time delta to winning orders on the outer boundary of the exchange network. So that particular offering was initially only available just for executions, but we've now expanded it to also an HPT all service or file, which now covers market updates and not just the execution portion. As for how it's used or its actual applications, for a few things, and this takes us back to the backtesting conversation, but it can be used to evaluate and optimize investment strategies. You can also use it to backtest your algorithms, like I mentioned. And overall, it can be used to help to better understand the overall market microstructure. So HPT in particular is something that we've recently updated or included EEX on. So if you're trading on the European Energy Exchange, if you're an HFT trading on EEX, HPT is now available for that as well. But like I mentioned, for Eurex or for any of our Eurex members that are also HFTs, this is an application that is, I would say, gaining a lot of traction right now.
Well, we can't talk HFT without the F part, which is frequency, which is, of course, the speed out there. We have seen a push in the U.S. because the cost to shave those milliseconds, the quest for zero, I won't say it's dead because it's never dead. There's always firms who are always going to be chasing that elusive target. But the cost to keep getting ever closer to that zero got so exponential that we did see some firms shifting to less latency sensitive types of strategies just to avoid the extremely onerous costs that go along with it. I'm curious what we're seeing across the pond, Daniel. Is the HFT, is the frequency, is that still alive and well? Is the race to zero still churning and burning over there across the pond? Or are we starting to see in this era where everyone's kind of cost sensitive, are we starting to see maybe some shift to some less latency sensitive type strategies?
No, the race is on, and it's certainly pushing the ideas within our roadmap. So we've certainly been like on a development push recently, and connectivity is at the top of that list. So one of the projects we've been working on specifically within the market data and services group has been our HPT Quantum offering. So we're expanding it and calling it or branding it Quantum. This is a product that our HFTs, our high frequency trading customers, already benefit from, but we really just been taking their feedback and asking them, how our products could become even more useful, and then use their input to work with this new iteration of the data set. So HPT Quantum will actually be pushing the time granularity to its maximum, moving from nanosecond precise timestamps, like I mentioned earlier, to picoseconds. For anyone that doesn't know, that's a trillionth of a second. So what that will ultimately do is equip our traders with a lot more clarity on how their trades and market events are actually occurring on the exchange. With that release, we hope to roll it out Q1 of 2026. But I think that just also kind of points out, to your question, what the market's been asking for. One of the things we do within our group is we do like to gather a lot of feedback on how our data sets are performing, if they're finding signals, if things can be done better, and we actually turn that feedback around and implement it into the data set. So again, to answer your question, the race for speed and connectivity is definitely on.
Well, there's been an interesting evolution here in the U.S. markets, and we've talked about it a lot. Matt and I have talked about it a lot on various other shows, which is, of course, just in the last few years, we've seen this explosion of very near-dated contracts, the 0-day, taking up all the oxygen in the room, which, of course, from a data perspective, poses many interesting and or frustrating challenges. I've talked with a lot of analytics service providers, data providers over the last few years, and a lot of them have been tearing their hair out. It wasn't that long ago, listeners, if you were trying to run, let's say, a backtest, a lot of the data you were using was close to close, which guess what? You can't even use that for a 0-day backtest. So a lot of things had to be thrown away and completely rethought in the onset of this 0-day explosion we're seeing. Maybe Matt, we'll start with you because I know this is an interesting problem you've come to grips with. It's not an inexpensive thing to come to grips with out there. What are some of the challenges you're seeing on the data and analytics side as everyone is racing to embrace this 0-day phenomenon, sir?
So we've come up with minute-by-minute data sets, and we deliver those to clients, and then the clients then start to understand how expensive it is to manage those minute-by-minute data sets. And then they push back, hey, it's very expensive, to get those over to me. What are you going to do about it? So we now put these on ultra-fast cloud-based databases, so they could use an API to get at any minute, any little ticker of all the available data back to 2020. So it's quite incredible that you could pick any minute and get all the information on any small granularity of data. So, and then some people want the data. So now what we're doing is sneakerware. We are delivering the actual discs to people. That might bring back memories. We used to get TAC data on CDs, which was the second-by-second stock trading data when we used to simulate that back in the day. But now we're trying to do anything to get all this data. It's just an incredible amount. It's very expensive to transfer it. So, companies like mine that are processing data, selling data, trying to get it to customers have to be very creative to make it cost effective and useful for these people. And they also want it longer. So, Mark, we're going from 2020 every minute back to 2015, and we're processing that right now. So our data has just doubled, and now we, that even makes it more important to come up with ways to get it to your clients. So, and then of course, all the computing we're using, the cloud has made it so much better. I mean, back in the day, I'd have like a sea of computers in my office, and you'd go in there and it'd be like 85 degrees, and we're like maxing out all of the air conditioners. So the cloud makes it a lot easier, and AI is making it a lot easier for us right now to process this data, and it's also making backtesting easier for our clients. We're coming out with a way just to ask our auto AI, and I know whenever I mention auto to you, it sends chills down your spine.
I look over my shoulder to see if he's watching me right now.
I know it's very scary, but auto is going to be helping us out as well. So yeah, those are some of the considerations with all this data now, Mark. It doesn't keep me up as much at night as much as it used to, but it's still just an incredible amount, and it really takes dedication from your tech team and a lot of creativity to get it right.
Is it wrong, Matt, whenever you mention auto, that I picture the HAL 9000 with the glowing red eye right behind me as you're speaking? And you're right, I do get chills down my spine. For whatever reason, Otto is a malevolent force to me, even though I know he is useful for many others out there. Speaking of useful, maybe we could set Otto to a task, Matt. What do you think? You and I have been talking for a long time, and you've been crunching a lot of numbers for our listeners on the American earnings front, our earnings vol reports, our earnings season reports, the move results. Our listeners love it. I see chats about them all the time and comments. They love that data. What do you think? Is there enough grist for the mill, Matt? Is it time for a European earnings report, especially because it's really only twice a year?
Yeah, I mean, we talked about this on another show, and I think you might have even had a poll on it. Should companies report?
Oh, yes. I have the results coming up in a little bit, sir. Tease.
All right. More frequently or less frequently, where I stand, of course, is more frequently, even down to people should be able to watch almost daily how sales are going. But I think we'll get to that later on. I mean, when I say later on, in 10 years. So, I want to see more clarity on that. Yeah, and as far as European, I mean, we do cover, there are dual listed names that we cover, and they're interesting. They tend to not have the same magnitude of moves. I don't know if it's, just so infrequently. You would think that it would move more, but it really doesn't. In those names, it's muted. I don't know if they're not putting out as much information. They don't have as many analysts trying to predict it, since it's so few and far between. So I'm not sure why that is, but probably it's because they're big companies too. But we haven't had that huge interest, and on the big individual stocks where we can, you need pretty tight markets in order to calculate the difference between 50 delta implied volatilities in order to calculate an implied earnings move, for example. So, you need a lot for that to happen. So they're not quite there yet, Mark.
Not quite there yet, but on the cusp. I know a lot of our listeners will keep an eye on it, but you know what? We're already starting to come up against it. Hard to believe time flies when we're talking all things European markets. So let's go around the horn. I know we have some listeners who want to get at us as well, so I want to make sure we save a little time for them to answer the red phone. But before we get there, let's go around the horn. Let's go back to our favorite Taxicab confessional. Mr. Rhoads, if you have any final thoughts on data and platforms and how our listeners can access it, have at it. And then B, speaking of our listeners and, of course, a lot of retail, sounds like you're hearing some interesting chats, interesting feedback with the retail folks about some Eurex products, sir.
Yeah, well, specifically with one specific product is something that we're very aware of, is that we do get we get more reactivity out of VSTOXX than we get out of VIX whenever we have a volatility event. It's for whatever the case is, you just get more bang for your buck out of that one. And I get a lot of questions about that. There's a systematic approach that I update every once in a while that allows you to have long volatility exposure and not in over time not lose too much on the positions that you put on. So there are behavior differences that should attract U.S. Investors. In fact, I feel like we've done a disservice within the derivative space, where we talk about trading the S&P 500, which is or the EURO STOXX 50 or the DAX or whatever, which are very diversified indices, but we don't talk much about applying diversification to the markets, the underlying markets that we trade. A lot of people only concentrate on one or two of them. And I feel like the Eurex complex is a great area for short-term traders to focus on, because things get volatile intraday for the European markets just as things are calming down in the U.S. And I think one of the biggest selling points for traders, especially in the zero DTE environment, is you've got an extra market close every day. And there's a lot of excess volatility, and there's decent liquidity in the daily Euro Stocks 50 options right now. But and as I mentioned before when I was talking about the data thing, there's a time of day where I compare VIX and VSTOXX and make trading decisions based on that, and it's typically when the morning has slowed down in the U.S. and we're hitting the close in Europe. So just if you're one of those guys that spends all day looking at the markets, about an hour and a half or so, into the U.S. trading day, Europe starts to act like that excess volatility that is associated with the close, and it's just an extra opportunity for short-term traders and a market that behaves differently, has some of its own idiosyncrasies that it will diversify you.
I like it. Excellent point, sir. And of course, no surprise that the listeners are keen on VSTOXX. I think we have a listener question about that just today. We'll get to in a little bit. But before we get there, let's keep going around the horn. Daniel, you want to leave any final thoughts on the data side for our listeners? Any interesting trends you're noticing? Maybe things that are coming down the road that you want our listeners to keep an eye out for? Either way, sir, the floor is yours.
Generally speaking, if your goal is to just try and leverage, I guess, sort of proprietary data from behind the exchange network, then you should certainly be looking to us. One of the things I didn't mention is the data that we provide is direct from the source, right? Deutsche Börse is, the sort of the umbrella company that runs Eurex and Xetra and these other exchanges that we work with. So the data is all directly from the source. There's no estimates or estimation included in any of the data sets that we provide. But yeah, if you're looking to trade more efficiently on Eurex, you just need to know that there are analytics and tools that you can use to do that. Our most popular one is our Eurex flows data set, like I mentioned earlier, which is actually being redeveloped and rebranded now to include not only the Eurex flows and open interest that I mentioned earlier, but cleared flows as well. It's another new product that we're releasing. So ultimately, if you're trading on Eurex, if you're running European derivative strategies, any sophisticated European trading strategies, there are data sets available to you. A great place to start is certainly the Eurex website, but also the market data and services website, which, easy enough to Google it and bring it up. But the Deutsche Börse market data and services website would be your one-stop and shop for all the analytics that we have available.
There we go. Matt, the last word on data is yours. I know you could probably fill several hours with your final words on data because it is near and dear to your hearts. But if you want to leave your listeners with any lasting thoughts, any interesting trends or developments or things they should keep an eye on, specifically on the data front, sir, have at it.
Yeah, as opposed to Daniel, that doesn't have derived data. That's all we do at ORATS. So that's how we differentiate ourselves. So we actually try to make sense of some of this data. Daniel has some great data that's right at the source. And what ORATS does, it takes it and tries to make sense of it, tries to make indicators of it. So what we're doing now is using these indicators to help traders get in and get out of certain trades. So we have all these back tests. Then we're using back tests as data now. So now we take these return streams of back tests and say, well, you should get in when the implied volatility 20-day moving average is above the 50-day moving average, or whatever, one of 1 million different indicators. So that's what ORATS does, and how we separate ourselves is by turning our data into indicators and helping traders time their trades, because what else do you have, right? You have to know which trade to get into, which indicators will help, when to get in and when to get out. And so that's what we're concentrating on for optimizing back tests, the timing now, and not just the overall value for traders, Mark.
All right, listeners, we'll have to leave it there for data. I have a feeling we'll be coming back to this topic on a future episode. There's a lot going on the data front, and it's a very important one. You folks need to know how to come to grips with these products at the end of the day. But speaking of you listeners, it is now time for you folks to take the reins as we answer the red phone.
What's on your mind as you're navigating the wild world of European derivatives? Let's find out as we answer the red phone.
All right, everybody, welcome to the Red Phone, the portion of the show where you folks take the reins, your questions, your comments. I see some of you folks in the chat having a good time with the show as well. Daniel, definitely seems like your comment about German law requiring traders to identify themselves, at least on a firm basis, is resonating with our audience, Daniel. They think we should have that here as well, Daniel. What do you think?
Well, I will say it doesn't leave any room for speculation, right? You can see your agents are obviously your sell side institutions trading on behalf of the buy side. Your market makers are those participating in liquidity schemes, and your prop traders are obviously trading from their own accounts. So having that be mandated in order to have the information available within our data sets is certain that something that's our clients certainly value. It's something that's expanded from Eurex to other data sets as well and other exchanges. So I think it's a great thing. It helps us out a lot in terms of granularity, and that's usually one of the things that our end users, who are primarily hedge funds of this data, are looking for. Right? They want to know. They want as much transparency or granularity within the data sets as possible, and we're able to do that without revealing any sensitive market information or market structure. Which again, the more detail, more transparency that you can provide without revealing any sensitive information is something that our clients hold valuable.
Yes, more transparency, the better. In fact, there's a push here in the U.S. to go the other way, to get a little less transparency, something that Matt alluded to, which was our question of the week last week, Matt. And we finally have the results from our audience. We said, obviously there's a push now from the White House and from the SEC to change earnings season here in the U.S. from quarterly, which of course gives us a lot of insight into what's going on with these companies, to now semi-annually, effectively twice a year. There's some discussion about companies are too myopically focused on the near term, and there's certainly maybe some grist for the mill there, but we certainly prefer more transparency rather than less. More data points, obviously, for our audiences as options traders to be able to trade around is also a good thing. And it seems like, Matt, you were definitely on the keep it quarterly front. I know I was when we talked about this last week. It does seem like our audience agrees with us. In fact, exactly 2/3, 66.7%, Matt, said they want to keep it quarterly. Interestingly enough, must be listeners of this show. Number 2, 17.9% want to go the European way of once per year. Wow, that was surprising. And then 15.4% also echoing some European markets with twice per year. So clearly the European market brief audience are resonating strongly. But Matt, clearly the majority of our audience, they agree with us. They want to keep it quarterly. What do you think, sir?
It always sounds weird to say it, like have daily earnings sounds crazy. But, if you look at 6 months versus 3 months, that sounds crazy too. So, and hourly option expirations sounds crazy, but I think it's going to be coming, Mark. So, it's science, until there's a big revolution, and then everyone thinks, oh yeah, of course, it's been this way all the time. So I think a big things are coming and are better for the markets, and it's definitely clarity with earnings, Mark.
Daily earnings, that would be a wild market. Well, today's earnings are crap, but Tuesday was amazing. We crushed it on Tuesday. Wednesday, not so much. I like the cut of your jib, Mr. Matt, but let's keep rolling here. Let's see what else our listeners have on the brain. Daniel, next one sounds like it's right up your alley. This comes from James Edwards. He says, I love the TWIFO reports that you provide on that show. Well, thank you, James. He says, they are a fabulous resource that you provide to your listeners. Because of that program and that data, I'm slowly becoming a nat gas trader. Ooh, you've been lured to the dark side, James. Well, you're welcome. He says, still mostly 1 and 2 lots, but I'm growing. Thank you very much for that. Well, again, you're welcome. It's a very active product. I could see why you would gravitate towards it. It kind of puts the lie to the notion that you need an underlying above $5 or $10 to have a lot of options flow. Nat Gas can put up a million contracts, and the underlying is sub $3, maybe a little north of $3 right now. He says, I've been listening to the full network in search of other products to add to my arsenal, and I've been enjoying EMB, I like that abbreviation, EMB, the European Market Brief. He says, is there something similar available for Eurex options, where I could see the latest activity, volatility, skew, etc. If not, can I put my vote in for one? As I would certainly find it useful, and I don't think I'm alone. Thanks again. Well, you are not alone, James. We've heard inquiries like that from other listeners. I've thought about it more than a few times. It is a fantastic resource. If you've never listened to our This Week in Futures Options show, listeners, we do create a report along with that show that you could find over there on the CME website that does list all of the, as he breaks down, all of the hot options that are trading in that underlying, the skew, the volatility. It's a useful resource for markets that can be somewhat opaque. And Daniel, we've had a theme here on this episode as well of helping people come to grips with these markets. They want to trade them. They want to trade these products. They need a little help on the data front. So what can we tell James, Daniel? Maybe what are we cooking up behind the scenes at Eurex? Any cool reports he can look forward to, sir? Any analytics?
Sure. So let's see. It's a bit of a loaded question. Where to start there? So no specific like market brief, at least not from my group. But we absolutely have a lot of new sort of interesting projects on the roadmap. One of the main things, specifically around Eurex, is this new Eurex Dynamic Suite that we're looking to release actually pretty soon. October 10th is the release date. And what that does is it builds off of our current flows product. Like I mentioned earlier, it's a buy minus sell volume product broken down by trading type or market participant type. And the flows, like I mentioned, is delivered T+1, which covers all the like your executed volume and transactions and your reversals. Again, these are tools that are available so that you can, basically you have a little bit of market sentiment. Even though these are historical data sets T+1, it's giving you some sentiment in which ways and to inform you in which ways the market's moving. Our open interest, like I mentioned earlier, which is actually delivered T+2. And the reason for that is it covers all post-trade adjustments up to 1 p.m. CET. And then cleared flows, like I touched on earlier, which is being added to that. And that accounts for all the same day adjustments, but not the next day ones like the open interest does. So just in terms of looking at flows and having that market sentiment and seeing which ways the markets are moving and seeing which one of those market participant types are entering and exiting from a flow standpoint is certainly a new tool that's coming out that would be really helpful to not only your listeners, but anyone participating in really sort of dynamic, I guess, trading strategies.
Well, speaking of dynamic trading strategies, you teed us up for this next one here. This comes from Eaton 34 maybe, or just ETON 34. Either way, they say, hello, Options Insider crew. Well, hello, Eaton 34. He says, not sure if this question should be for vol views or the new European market brief. Well, yeah, I can see your challenge. Dr. Vix does pop up on both there, / VSTOXX. Russell, you said people like your analysis of VIX versus VSTOXX. We got something along those lines. He wants to know, are you seeing the same chasm? You can tell he listens to vol views. He uses our word. Seeing the same chasm between the cash index and the front few months in VSTOXX that we are currently seeing in VIX. Well, just to set up listeners, if you haven't been listening to vol views recently, this has been a frequent refrain we've had on that show where the cash is several points below the front few futures. And even then, the next couple of futures, there's a couple of points between them, which has posed some interesting opportunities for calendar spreads. I think, in fact, Russell has been trading a few. So, Mr. Rhoads, you have any thoughts here for Eaton 34? Are you seeing the same thing in VSTOXX, sir?
I haven't checked in on it lately, but I feel like we're a bit more elevated in the U.S. than we are in Europe, and part of that's because of the lack of realized volatility that we've seen in Europe versus the U.S. And there's also seems to be, and I know I'm deviating a bit, but the out of the money SPX put skew is very high relative to at the money right now. And it's not, and that's not being replicated, or not to the extent that we're seeing it in the U.S. I think we're like at the 96th percentile or something like that of levels of out of the money skew versus at the money, out of the money put skew. So you're seeing things. They're not as braced for some sort of issue in Europe as they seem to be in the U.S. And Yeah, you always like to talk about tweet risk. Maybe there's just more tweet risk in the U.S. than there is over there right now.
We do live in a high tweet risk. That should be our next Greek. We should add that to the Greeks, right? Delta, gamma, theta, vega, and of course, tweet risk.
I learned a new Greek today, but I haven't been able to. It's called beta vega.
Beta vega. I like it.
It's the contribution of I think it means the contribution and implied volatility from a single stock for an index, but I don't know. I just heard it in passing, and I'm like, oh, I got to find out what that is.
Oh, I have to,
just because it sounds cool.
It does sound cool. I might have to dig into it a little bit deeper on volatility views this week. We already come up against him, and Mr. Matt, sounds like you have some thoughts on the old ever popular VIX versus VSTOXX question, sir.
Yeah, and it's always fun to talk with Russell, but because he's got a more of a historical volatility views type mind. But what the listener was talking about is the chasm between the cash and the futures, and it is quite a chasm. 32% from the spot all the way to the farthest May 26th expiration for VIX futures. You could contrast that with the VSTOXX, which is 21%. So that's a pretty large difference. So your listener was asking, what is VSTOXX chasm versus the VIX chasm? Well, not quite as great on that one. Even the front month cash to October is 9% in VIX land and 6.5% over in Euro. And then the next one after that is NOV, 21% here, 15% there. So not nearly the chasm that we're seeing in the VIX right now. So that, I think that's a pretty telling stat for old. That might be a signal for Mr. Rhodes's calendars right there, Mark.
That it does, sir. Unfortunately, that music means we've come to the end of our... Man, an hour flies when you're talking all things European markets. But before we go, we'll go around the horn one final time. Daniel, we'll start with you, sir. If there's any other thoughts you want to leave our listeners with, have at it. And also remind them one more time, if they want to check out all of these data sources, where should they go? What should they do?
Sure, absolutely. So the Deutsche Börse marketplace, right? Like I've been mentioning, there's a number of different data sets. You can browse our entire catalog on our marketplace. So website is a bit long, but I'll go ahead and say it here. It is marketplace.deutsche-börse, that's BOERSE.com. There you can browse the entire catalog of available analytics for everything under the sun, from Eurex to other exchanges that we work with. And if you have questions, feel free to reach me either on LinkedIn, via email, daniel.murillo@deutsche-börse.com, and I'll be happy to get back to you.
There you go. The wellspring from which all of this content flows, Eurex.com, EUREX.com, the place to go to begin your data journey into all of these markets we talk, not just on this episode, but every episode of this show so far. Eurex.com, the place to go to kick the tires and light the fires. And Mr. Matt, where should they go if they are brave, or dare I say it, foolhardy enough to want to engage with Otto, sir?
ORATS.com actually has a paywalled version of Otto. He's much nicer than the one once you get behind the paywall. Then it's like takes the gloves off, and you got to watch out. So ORATS.com, get in there on the dashboard. It's amazing right now. Great feedback. We're out of beta and now into this much more easy to use. Trades come out a lot easier. We have all the back tests. Everything's firing. Nice job, Daniel. And Russell, it's great to be on with you. Thanks, Mark.
Great stuff indeed. Mr. Rhoads, first off, our listeners want to know, are you still in the Taxicab Confessional? What is that meter saying? And then B, if folks want more Russell Rhoads in their lives, where should they go? What should they do?
I'm in the lobby of my hotel driving people nuts. That's what I'm doing now. I've even had a burger while we've been on here. I've been doing I'm the king of multitasking today. If you just want to keep up with what I'm up to, just listen to all the programs on your network because I show up a couple times a week. But otherwise, the best place to follow me is on Twitter. It's my full name, Russell Rhoads, Rhoads, not the weather guy. And finally, we put that paper out that you allowed me to talk about, and one of the things that came up when I was talking about it on the Pro, we're going to have an update coming out this weekend on it. So keep an eye out for that.
Oh, check it out, listeners. If you want to hear exactly what he's talking about, head on over to the Pro, theoptionsinsider.com/pro, where Russell broke down his latest, talking about data, his latest unusual activity research. Does it work? Does it not? Which strategies are most effective? Which ones are least effective? We had a great chat about that. Theoptionsinsider.com/pro, PRO, the place to go to kick the tires and light the fires. That's going to do it for us on episode 10 here of the European Market Brief. Back later today after the closing bell, talking about data, crunching all the numbers on the hot options report. Yet another reason why you should be subscribed to the full network here, listeners. Then we're back again with our usual array of content till we're back again with another episode of the European Market Brief. Stay safe out there, everybody.
The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of EURO STOXX, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.